And then one day, back in 2022, in the summer of 22, I was checking that calculator again, and I did the same analysis, 2020 to, well, 1997 to 2020, and all of a sudden it dropped to like, it was 1.9 instead of 2.7, and it also revised all the CPI going back to like the post-war period by like almost, well, over 1%. And I thought these people are rewriting history. So what I'm saying here is that these numbers today are probably, well, the RPI is probably more like 6 and the CPI is more like 5. So it's even worse. Wednesday, August 20th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we just had the CPI numbers from the UK, what's known as inflation for the mainstream and for the masses. And why do I say that? Well, because by now you should know that inflation is not really the CPI, that's the consequence of it. But we'll keep the narrative because that's what they're going to talk about, that inflation is kind of out of control in the UK, and I'm going to show you why as well, and I have proof of that through my videos, that the inflation is a lot worse than they're telling us. And you might ask, so what is inflation? Well, inflation is the creation of currency and credit out of thin air, not backed by real savings like gold and silver. And yeah, that's what happens in the fiat currency system. And I've been warning about the UK for like 5 years or even more about the debt load that we have, ticking time bomb for the debt. And also I've been warning since 2021 of economic collapse in the UK. Is it the end of the world? No, I'm not trying to scare people. I think if you've been doing the right thing, and the right thing in my opinion is getting out of debt, trying to get out of the system as much as possible, have some physical gold and silver, be self-reliant, live within your means, I think you'll be fine. Unfortunately, the masses, the great majority of people, even people that think they're well off right now, they will be in big trouble because interest rates and bond yields are not gonna they're not gonna help, i.e. they're not gonna keep dropping like they did from the early 80s until 2020, and I warned about that as well, starting like in 2019, saying that we're long in the tooth for the bond bull market, and the other side of the coin of the bond bull market is very cheap financing, and I think that's over. So what we're going to do today, we're going to look at an article that's come out in the FT this morning, basically admitting that there's a problem in the bond market and that central banks are going to have to help out, lose their independence, and start printing, or else the debt situation will get out of hand. Well, and as I've said before as well, all fiat currencies are sinking, and I have a playlist for that. I have a playlist for the UK situation, actually two, and I'll put them all up in the cards here. But yeah, we'll look at the FT article, excuse me, and we're also going to look at a great little book called The Triumph of Gold by Dr. Franz Pick. Really interesting, and I'm going to forecast or try to predict again, and I did that back in the summer of 2022. I thought the bond market looked, especially the UK one, of course, looked precarious, and I said by the autumn equinox or the fall equinox, which comes around the 20th September, 21st, there will be a major crisis. And you might be thinking, what are you talking about? Well, you'll see when I talk about this book, and I think we're due for another big crisis. And it might not just be the UK this time. It could be the whole Western world, especially countries like the US, Germany, and Japan, and France. So it could be the rerun, but it could be the end game, rerun of the sovereign debt crisis of 2011, 2012, when we just saw the periphery of the Eurozone get hurt really badly. But yeah, those countries have recovered quite well, but they're going to be in for a tough time as well. So before I go further, just wanted to give a shout out to my precious metals dealer affiliates. And one of the reasons I have these is because over the years people have asked me, where can I buy gold or silver and silver? And I said, well, do your homework, buy from a reputable dealer. And yes, but I gave people the option as well to look at gold investments in the UK. They've been in business since 1981, family-run business. All the details are below in the description. And in the US, Miles Franklin as well. They've been in business since 1989. So, yeah. Have a look in the description. I've got a landing page link for Miles Franklin. And with that, let's look at inflation, or CPI. That came out this morning just about 15 minutes ago for the UK. And it's not good, guys. It's only a 0.1%, or yeah, but the markets are going to react very negatively. The gilt market hasn't opened yet, but it opens at 8 o'clock. But I will bet that yields are going to continue rising, and that's bad for the government, bad for the economy. And why is that? Well, because the bond markets are the biggest markets, financial markets. It's not the stock markets. And in a fiat currency world, the debt is really important. And if bond yields are going up, it's going to be very hard for governments to operate. They're going to have to tax more. Not that I agree with it. Yeah, it stops a lot of people from consuming and borrowing. And yeah, that's what it does. I think we could be in for a major crisis, but let's have a look here. Well, the headline CPI, that was expected to drop 0.1 on the month for July and rise 3.7 year on year. The previous number was 0.3 and 3.6. So it came out at 0.1, which is 0.2 more than expected, and 3.8. Don't forget, and no one ever talks about this anymore, the Bank of England has a target of 2% in the CPI. That's part of what Gordon Brown wrote down back in 1997 when the Bank of England was given independence. It had to keep a 2% target. But I don't hear people talking about this 2% target. If anything, the Bank of England has been cutting rates. They should be raising rates. But that's a different topic, even though it's not that it's not important. But we also have the retail price index, which is another measure of prices, which prior to 1997, that was the main measure of inflation. And that one is almost at 5% now. It rose from 4.4 in June to 4.8 in July. It was expected only to rise to 4.5. So they have a problem. Houston, we have a problem. Or Threadneedle or Downing Street, we have a problem, i.e. the Bank of England has a problem. So I think, and I've said this before, we are on the road to Weimar. And by Weimar, it's a reference to the currency collapse in Germany in the early 20s. And why do I say that? Well, there's an article today in the FT warning about this. It says investors warn of new era of fiscal dominance in global markets. Combination of record government debt and rising borrowing costs put central banks under pressure. I just remember that, and before I continue with this article, that for the UK inflation situation, I said earlier that it's worse than we really are being told. And why is that? Well, because they changed the methodology back in 2022. And I have a video from July 2022 explaining why they've done that. And I'm going to put it up here in the cards. It says, the title is ONS Flagrantly Fudges Inflation Data, Bank of England off the hook for overshooting CPI target. So I'll tell you what happened briefly with this back in 2022. I always used to check, and sometimes I still check, the Bank of England inflation calculator. So prior to them changing the way they calculate CPI, I calculated the CPI average from 1997 to 2020 to see if the Bank of England kept that target. And well, the average CPI in that period was 2.7. So they failed. I know it's only 0.7, but they failed. And then one day, back in 2022, in the summer of 22, I was checking that calculator again, and I did the same analysis, 2020 to, well, 1997 to 2020, and all of a sudden it dropped to like, it was 1.9 instead of 2.7. And it also revised all the CPI going back to like the post-war period by like almost, well, over 1%. And I thought, these people are rewriting history. So what I'm saying here is that these numbers today are probably, well, the RPI is probably more like 6 and the CPI is more like 5. So it's even worse. But back to the article in the FT, they're basically saying here that the debt situation is so bad that the central banks are going to have to help out the governments. And that usually is not supposed to happen in this period of central bank independence that we've had, let's say, for the last 25, 30 years. Central banks are supposed to be, do the right thing to keep inflation or CPI down. But now the debt is so bad that if they don't cut rates, or if they don't stop now the QT and start QE again, it's good night Vienna. And by that I mean we're going to have a major sovereign debt crisis, and it could be the end of the fiat currency system, which would not be a bad thing, but you can bet these central bankers and governments are going to try to keep it going as much as possible. So one of the things that I thought was really interesting here is the fact that, let's have a look here. They're talking about how much debt is in the system and how much debt they need to borrow, the major countries. Here we go. It says the OECD says it expects sovereign borrowing among high-income group of countries to reach a record 17 trillion this year, compared with 16 trillion in 2024 and 14 trillion in 2023. And I think what's going to happen is that, this is going to keep increasing. The other thing it says here, it mentions Ray Dalio. And Ray Dalio, it says here, Dalio added that such concerns could reduce the value of major reserve currencies, such as the dollar and the euro, against gold, which has hit a record high this year. And Ray Dalio, he's been warning about this now. Of course, I've been warning since I was in the city at work in the city of London, working in the bond markets. Back in 06, 07, I said all fiat currencies are going to sink because that's the nature of fiat currencies. So what do I think is going to happen? Well, the central bankers, they're going to be pressured. Maybe the Bank of England is going to hold off, and because the inflation situation or CPI situation isn't good. But when the crisis starts, and I think it's going to be over the next month, and it's interesting that again we're approaching that autumn equinox. And why do I talk about that? Well, let's have a look here at what the introduction of this book says. The introduction is by Dr. Henry Jarecki. So he says here, Pig told me. The most important prediction I made was very romantic. In August 1931, my new wife, Peggy, and I lived in Paris. That summer, she went to Bohemia to visit my parents. And knowing she would be gone for a month, I went sailing. I sailed from Holgate, the small French village where William of Normandy first gathered with 15 men who went with him to Hastings in 1066, to England. So he sailed to England. But when I arrived there, in the small town of Cowes, that's in the Isle of Wight, Cowes, to be exact, I found so many other boats there that I could not moor. Small boats, one after the other, were bringing sailors to shore from nearby battleships. I asked one of the sailors why. He said, "Young men, we're going on strike." "Why?" I asked. "For higher pay," he said. Knapp had taught me that currencies fall when there is a rupture in the state, and I thought striking sailors were a manifestation of such disorder. I concluded that the currency had to fall, and so I ran to the telephone and called the Czech financier, Pachek, to tell him to sell the pound sterling shorts. That was August 10th, 1931. Pachek sold me £1 million short, half to the Czech National Bank and half to Kleinworth's in London, Kleinworth Benson, on Yom Kippur, which happened that year at the equinox. September 21st, 1931, sterling was devalued and Pachek made $1 million. Yeah, I warned back in the summer of 2022 we could have a crisis in the UK, and I'm warning again now that by the autumn equinox, and let's see what day that is this year. Autumn equinox 2025. Well, that's Monday, September 22nd. So that could be the culmination of a major crisis. But this time I think it might spill over, and it might not just be the UK. And so let's quickly look at where things are right now. Yeah, the markets are still pretty quiet, and the gilt market hasn't opened yet. But we've got gold at 33.24. It's up $9. High's been 26, low 11. Silver is still having a tough time, but this is the wrong time to get rid of your physical gold and silver. Yes, if you're trading, that's a different story, but things are not improving, and especially after reading this article in the FT about fiscal dominance and that the central banks are going to have to step in, or else it's good night Vienna, right? I think it's more important than ever to have the precious metals. Well, silver's at 37.20, down about 20 cents. I think it's a great opportunity to, if you're fortunate enough to have enough fiat reserves to buy more gold and silver. That's my opinion. So the Dow futures is down 108. The NASDAQ is down about 0.5%, and the S&P is down about 1/3%. The currencies are still pretty quiet here. And in terms of the bond market, the Treasury market seems to be a little bit under pressure. The 10-year is up about 1.5 basis points at 4.32, and the 30-year is creeping up towards that 5% level. I'm sure Besant is keeping a close eye on that level. Right now it's at 492, up about 1.5 basis points. So there you go. We should be in for some interesting times in the bond market. And I think stock market investors are, especially the general public out there, they're totally unaware to the nature of this bond market crisis and how important and how negative it could be for the stock market. So look out. And I think you'll be fine if you have a little bit of gold and silver, and you will weather the crisis in the UK especially. So with that, I'm going to wish you all a very good day. Take care. Bye.